Okay, let's go.
Yep. And we are live. Hold on, let me. Okay, we are live. Just let the stream populate a little bit.
Where's the link?
Yeah, over here. Wait, give me a second.
Okay. Oh, I can see, I can see.
What's up, everyone? This is Ryan here, the Crypto Grinder, and today we have JJ Andy, and today we have Charles as well. Welcome, guys. Let the stream populate.
Everyone.
Let the stream populate a little bit. And we're going to get started on a very, very important topic, which is beginner's guide to investing in ICOs. Our favorite, man, ICOs. Man. Okay, give me a second. Let me just minimize this. Morning, everyone. Morning, Mr. Prox, Zachary, Evelyn, Brian, Jawan, Norek, Jams, Alpha Plus. Welcome, Ricardo. Welcome. 22 people watching. Of course. All right, guys. Today is a little bit on the late side, but thank you so much for coming by. Thank you for also attending the stream. All right, so guys, we're going to be covering a very important and fun topic for the Cryptacademy today, which is Beginner's Guide to Investing in ICOs. But before we step into the good stuff, Andy, where have you been, man?
Okay, so folks, I was away for like 10 days, and just want to give thanks to the Crypto Grinders team, especially the Crypto Grinder himself for thanking everything, and Orpiton, and definitely Charles as well, and Brian. So for thanking the whole team. So I went around Taiwan for about 10 days, went to Taichung, went to the highest peak in the East Asia, that's in Hehuanshan area. So that's pretty cool, 3,275 meters high. It's freezing cold there. And
I saw some nice pictures, man.
Yeah, man. So I went to this place with a lot of flowers, pretty nice place. A lot of good food, got some facts here and there. Basically just washed up my mind fresh. And kind of miss the crypto market, kind of miss how crazy it can be. And so I was telling my fiance, kind of miss the market. Like she was like, okay, stop working, stop reading stuff here. Like you're supposed to enjoy this place. I'm like, oh no, the folks at home are doing so much work. I gotta catch up on stuff as well. Yeah, so.
But wait, you didn't you mentioned fiance, right? But yeah. you did make her your fiance during the trip, right?
So I was kind of grinding hard. At the trip itself. Yes, I did. Yeah. So
that was some romantic stuff, man.
Yeah.
So I mean that's life, right? You can't be like crypto, ICOs, and trading and investing and whatnot. I mean, look, hard fork or not, man, this life still goes on, and you know we are just so happy to we saw your proposal, man. That is like on one of the mountains. Is it you proposed on one of the mountains, right? Man, that's nice stuff, man.
Great view, man. Like 20 degrees Celsius, cold, great. Yeah. So
wow. It's extremely romantic, man. Couldn't be better. And then okay, so I guess you coming back. So how do you find the market right now, bro?
Well, we do see BTC going through a huge consolidation here. Looking at the prices, and it's ranging between 5,400, to even 6,200, that range. And it's been range trading for a while. BTC And I think everyone is, just standing by, sitting on a fence, just looking out on where SegWit2x would, what kind of impact it would have on BTC prices. And I think moving forward, it will be quite interesting. Yeah, I mean, BTC Gold didn't have much impact. It basically pushed it beyond $6,000. But SegWit2x could be the key, could be the FUD that that BTC requires to push it to a higher level. So, and all the odds are not doing that well, right? That's fantastic because BTC is just gaining strength here. So I mean that's just overall how I'm seeing the market right now. Yeah.
Okay, Charles, do you have anything to add with regards to the SegWit2x? Hey peeps, John Schofield, what's up, bro?
Hey guys, so I think regarding 2x, it's a very controversial topic. I guess the main key indicators, I think we've been telling it around. I think those in the signals chat will know what to look at for. Basically, 2x, how many companies are leaving the NYA agreement, and also what is the miners announcement. Do check out their Twitter or anything, especially Bitmain, on their stance on when they're going to switch, who they're going to mine. And at the same time also, I think everyone's talking about Coinbase, they're getting flamed for the longest difficulty and the way they pronounce which is going to be called BTC. So I think that's the most important thing to everyone looking out there. So the market is always changing. So please be careful, guys. Your money is important. Please be conservative.
That's the thing about all these hard forks, man. It is really causing unnecessary uncertainty for the whole cryptocurrency market. And you know what's the most anal thing about it? Whenever there's a fork, right, there's always free coins. When there's free coins, means that people will tend to want to leave alts for the free coins. Okay, and then at the same time, you have people, for example, interested in buying more Bitcoin, because Bitcoin now, no matter what, is still the main channel for us to enter the cryptocurrency markets, right? So, end of the day, eventually, I hope that atomic swaps or more liquidity in decentralized exchanges kind of weaves past or allows Bitcoin not to be the main currency for us to participate in the altcoin market. That way, when you kind of not peg it to the alts, or there are other alts that we can use to peg against. Say, for example, we could peg against Ethereum. So I've been recently trading with Ethereum as a base currency rather than BTC. I've actually been making consistent money, because you see, the whole idea is to you may not have much volume. So we're talking about maybe 5%, maybe a good day 7-8% against an Ethereum pairing, right? Because Ethereum's price seems to be a little bit more consistent as a base currency. And I think at the end of the day, we need that. So for people who are actually buying Bitcoin, it would be best to just buy Bitcoin during the dips and just hold. And if there's any kind of a parabolic movement, okay, then it's time to take profit and then wait and then go back to Bitcoin again, and not Bitcoin, altcoin. It's just frustrating, and no one is actually going to be able to make money, or no one is able to build up a stack in a BTC. But today's topic is not about trading in altcoins, but more of investing, or beginner's guide in investing in ICO. So, Charles, I think everyone knows that I am kind of like a newbie in the ICO space. But you know what? Most of the ICOs that I think I've participated in have made money. I think it's a good experience, and I think I've seen people have a very good experience with investing in ICOs. But is there actually a secret sauce or a method of selecting these ICOs? And today we're going to debunk these things, and especially if we can share tips and tricks for people to invest in ICOs, that would be good. So anyway, I just share a little bit. My first ICO was Humanic, and that actually did very, very well. Although I couldn't participate a lot in terms of ICOs, as in the sense that was my very first ICO. I think I put in about $2,000, cashed out $10,000, which was good. I think Andy can also attest to that, because Andy and I, we both stepped into Humanic. It was our very first virgin experience, not knowing the risk involved. And there is a lot of risk, especially when investing in ICOs, because right now Crypto Grinders is also we are also an ICO consultancy as well. So if it's anything, security is one of the top most priorities for projects that are raising funds through ICOs, right? Through an ICO fundraising campaign. So right now, what we're going to plan to do is just share a little bit about our experience, and I think we'll let Charles go first, because Charles has been more experienced in the ICO space. I think Charles got me into Kyber, right? And we made money. We made money on Kyber, man. But we didn't cash out when it went up, man. I told you when I was eating beef noses, I said, "Hey, Charles, I think we better cash out, man." And then you didn't cash out, bro.
Yeah, we didn't cash out.
You gotta dump it, man. You gotta dump it. Yeah. So
right.
let's just go into it, man. Let's go into it. So Charles, how long have you been investing in ICOs, and what are your criterias that you look out for?
Okay, I think the key thing about, I guess you got to get I think the main thing is to get the mindset first, right? That's the most important thing. The thing about ICO is that you hold a lot of risk. The reason why it's such a risky vehicle, because number one, it's not regulated. That's the most worst thing, because essentially, those people, when they tell you, oh, ICO is the fastest way to earn money, even all my friends are telling me ICO is the way to go, man. You can make huge gains and stuff like that. Yeah, making money sounds good. Everyone wants to make money. But at the same time, the most important thing I think you got to ask yourself is, can they outperform Bitcoin? Can they outperform the strong market caps one, the high cap? Is it better to just put your money in BTC and do nothing as compared to waiting, buy an ICO, early stages, and whether can you flip it on time, or whether is it good to long-term hold it? So I think there are a lot of factors in it, and it is very risky, because at the end of the day, there's hundreds or like 30 plus, or like each day you can see like ICO alerts, like this website where they talk about various ICOs. There's so many launching every day, so many people asking for money. So I think you got to be very careful and very strict with your ICO investment, because, okay, truth be told, when I got into this, I was like, oh my God, ICO. My first ICO that I ever invested was Agrello. And honestly, I didn't have as much strict research as compared to now. And yeah, I'm taking a huge loss, man. I'm like 50% down on it. So you just imagine, I mean, I invested like probably 1 or 2 ETH, very small amount. But could you imagine that investor that believed in product, like some guy said, like, watch YouTube and stuff, you throw down like maybe 3 months worth of your salary onto ICO because you hope, and now you're like 50% down. Basically, your 3 months become 1.5 months of your salary just gone like that. So it's serious business, guys. You guys got to protect your wealth. It's very important. You must understand that ICO is a risky business, because you come in on the early stage. Yeah, you're early. Yeah, and you're hoping that in 2 or 3 years' time it's going to be better. But ICOs and stuff like that has been along before Ethereum. It's just that it got popular and got easier to do it because of Ethereum. But prior to that, people are raising money. There are other sites that offer Bitcoin as a form of investment and stuff like that. But at the end of the day, when you buy a token, you got to understand that it is not a security. You do not own the company. They have no right to answer to you. They can just take the money and run. I mean, yeah, maybe they can get sued or something like that. But at the end of the day, they are not legally liable to you at all. Yeah, so you got to understand that. That's the most important thing. So you got to be very strict with your money, because at the end of the day, if you want to lose your money, the fastest way to burn it is ICO. Just go invest in 10 ICOs and hope, just like it's playing roulette. I'll say doing ICO is like putting roulette. You just like all in onto like one number and hope that you get the highest returns. Yes, the returns are amazing, but you got to pick your winners very well. And that's the most important thing, I feel, that a lot of people, and even right now, I'm not the best at it. And there's no proper framework. And like there are many frameworks out there on how to evaluate the ICO. There are a few people out there on YouTube that are doing quite good jobs. And I feel that it's an evolving space. And even Vitalik himself said that 90% is quite funny, because, okay, like in business, there's 90% of the startup fail. So just treat ICOs like a startup. Vitalik got a lot like a repost, because he just said 90% of the token startups will fail. He just added a token inside and he just managed to get a retweet. It's quite funny. But yeah, so it's very important to understand that it's very risky. And if you're willing to lose, it's something that like, you're going to throw it away. That's the mentality you have. That I'm willing to lose all my money.
But I'm sure there's a method to the madness. You know what I mean? There's a method to the madness. So maybe Charles, you can have a few key takeaways for the audience, because I'm sure there's definitely a way that people are making money through this. But I feel that as regulations step in, eventually, right, it's going to be more and more difficult for ICO projects or projects that want to ICO, and they're going to have more strict framework. So I guess that's not evident at the moment, but eventually I'm sure it's going to be like that. So, but maybe while the sun shines, right? Let's make hay while the sun shines. How would you advise the audience on picking ICOs? I think that's what everyone wants to hear. Yeah.
Yeah. Okay. All right. Just to summarize, I think the first important thing is you got to put in your time into the ICO. If you watch a YouTube video and just say, okay, this is going to be a next big thing, and you go buy ICO, you're probably going to lose your money. It's the truth. At the end of the day, there's a conflict of interest for anyone in YouTube, because I would say that no matter what, as in, I'm being honest here, like ICOs do approach us, and like even crypto grinders. I mean, Ryan, you also heard it. You can see the number of emails that you get, and yeah,
you should see the amount of shit I get.
Yeah, and it's a conflict of interest, because you see, at the end of the day, I'm full disclosure here. Some of our ICOs, if we do review it, we do get paid. It's fair. I mean, they're paying for our time. I feel that it's fair that they pay us their time. But at the same time, I feel that for CJ, when we were very strict on this, because when we asked us, I said that it ruins our reputation. Because you see, imagine if I get paid doing the ICO and I have to promote your ICO. So you see, indirectly, I'm getting paid first. I don't really care whether ICO is good or not. I just get my money just by talking about it. You get, I mean, you got to think about it. So when you guys watch a video on YouTube, when a person is trying to talk about a coin, I think you got to understand the thought process when you watch the video. That's the most important thing. So I'm not saying that Crypto Grinders is here like, oh, we're the best researcher or anything. But what I can tell you is that we'll do our work and we'll do our diligence to understand the business as much as we can. And from there, what we feel is that we provide a platform for ICOs or any business or startup to give them a voice. And from there, I feel that as investors, you guys should have the proper skill set to identify whether this is a good ICO or not. Because at the end of the day, it's your money. I'm not there when you pull the trigger. I only can advise you, hey, maybe this is not for you. This is for you. But at the end of the day, I'm human too. I get it wrong. You see, I bought some ICOs, they're not doing well. Yeah. And ICO market now is doing bad as well. Yeah.
And what would you think that is attributing to the weakness of ICOs at the moment?
So I think the main reason now is because the market is adapting. It's very trend-based. At that period was ICO fever in June to July. Like, look at Tezos. They raised so much money. So, like, they promised so much, but now they're facing a class action lawsuit. They want the governance protocol.
Do you invest in Tezos?
No, no,
okay.
Too much money. All right, so all right, I think can go along talking about ICOs for very long, and I think I think it's more important to understand what to look out for those people that just got new into the scene and stuff like that.
Let's jump into that. Yes.
All right. So first thing first is read the white paper. If you can spend enough time, you should just imagine venture capitalists spend months or maybe years or a few months researching a company, even meeting them in person and really identifying them, and to really understand how they like. So I think the most important thing is to identify solid, good long-term things, like really read the white paper. You can do a background check on their team. Yeah. And same thing, you can just really look at their team, how do they progress, their track record. And at the same time, you got to be very skeptical of it. Like studying accounting and finance in audit, there's always something that is called signaling theory, and also there's something called an unmodified audit opinion. Like people always, like if you knew an auditor is coming to audit your company, everyone will like scramble properly, make everything look nice so that they can pass the audit and make it look nice. I mean, yeah. But sometimes what audit do is that they'll do mystery shopper. They'll go in the shop unannounced and throughout the year and they'll check it out. So you got to treat yourself like you got to be very pessimistic and very strict when you look at the company. So if you look at their team, okay, yes, they have a nice LinkedIn profile. Okay, then check in. You got to check in deeper. Like maybe what are the past companies they work for? Then maybe can you find any dirt on the past companies do they work for? And you got to really dig deep. And I feel that this is not a one-man job. It's got to be a team to really look into all this information. And it takes time. Yeah. And so I feel that that's the most important thing. So I feel that that is something to look for the team and what's their track record. And the most golden rule is, do they have a working product or prototype or any of such sort? If it's just a white paper and some very nice extravagant things, run away, guys. It's waste your time. Don't waste your time. Just straight away. Okay, forget it. Move on. As much as they say, oh.
But it's so difficult to have a working product, right? A lot. Okay, I guess. Okay, like for example, when you talk about VC level, when you talk about private equity, there's always that phase of conceptualization or proof of concept. And that is the part where VCs usually put in their money. But 90% actually lose money. And also, even there's VC backing, right? They will tend to lose money even after a certain period because they tend to fail. But the ones that are the winners, right, will usually cover for the ones that are the losses. So do you think that a person, for example, let's say I have $1,000, should I invest in 10 ICOs, all right, and then and hope that one of those ICOs could hit, or at least a few of the other ICOs would do marginally, especially in the secondary market once it launches, so that I can like kind of cover and break even from then. So it's like kind of like a roulette approach. But that being said, do you think that that would be a better way?
Okay, I think the first thing first is to get the strategy in play, because from what I look at it, most people are here for the short term, and I say that this appeals to most people because everyone here is a flipper. Okay, what in ICO term they call it a flip. Like in VC, that's what people do. They flip because at the end of the day, they bear the most risk at the start. Because okay, just imagine. Okay, I think a good example would be like Facebook. All right, so example, you're like investing, like you just saw a guy like in Harvard, and then it's like say, hey, I have this product, will you invest in me? Like I need money. So this angel investor will be like, or this private equity firm will say, okay, I trust you enough, and I think you might deliver, though you don't have much, but I'll put down. So this is what it depends on the stage when you're entering the ICO. So you got to ask yourself, I feel that it is impossible for you to find like the next Facebook or something like that, because I think VCs already are doing that. So it's very hard, even though with the ICO where we are able to enter the crowd and stuff like that. VCs are smart guys. They're not like stupid. They know about ICOs and they know how to enter even earlier than that. So that's something you guys...
They're usually in at the seed round.
Yeah. So
the pre-ICO is for them to exit.
Yeah, sorry, correct. Exactly. So
the pre-ICO is for them to exit.
Yeah. So when they launch on the exchange, they can dump it, man, because to them, they're already in the money. So to them, it doesn't matter. Yeah. So that's something you also guys got to take note of. Like, how is the roadmap of the investors, pre-investors and stuff like that. At the same time, also, VCs also see potential in long-term companies. They don't just offload it for fun because they know that they have a fiduciary duty to take care of the company, and they know that they have an effect if they dump certain things. Because at the end of the day, it reflects badly. If some VCs find out that like people chatter, so you can find out if the VC dump or not. So that's an important thing to know and where they stand on it. Yeah, but at the end of the day,
there are some ICOs that actually prevent the founders from dumping for the next X amount of period. I think those are kind of okay.
Yeah, as in, I'll say that vesting is important. Yeah, so vesting basically means that the tokens, like all these VCs, they can like they have to hold it for a while. Yeah, like basically I have to hold it for a 1 year period before I could sell.
Yes,
so
that's
like,
fair.
Okay, like example, Binance. Okay, Binance, the founders and advisors, they have a vesting period, 25% every quarter or something like that. If I'm not wrong, I read a white paper on it. But at the same time, you guys must understand also whether they honor it is another thing. So yeah, so so it's like a weighing scale. You can never know whether would they honor it or not, because unless maybe it's smart contract or not. I mean, if you can read smart contract, yeah, maybe you can find out if there's such an arrangement. If not, yeah. So I think that's the key thing. So number one is working team, good product, a working product, and I'll say that and the best thing is always YouTube. Like go find YouTube reviews, Twitter, anything you can get on to get any news. Because any other day.
But how? Okay, just being a little bit old school. But how? Okay, just for let's say for you, right? You're someone who invests in ICOs. Do you think that the YouTubers are credible in terms of actually reviewing ICOs at this point? As in, when you look at the overall, like just be honest, unbiased. I mean, realistically speaking,
to a certain extent, I feel that no, they only can provide you a guidance, but not a sure prediction. Like they're not gods, man, or even they're not like the best in the industry. Because I mean, like you gotta understand that this space is very young. Anyone can be anybody, and so it's very hard. Like it's like I feel that reputation is important. So whatever YouTuber you watch from, it's always good to see what's their reputation, what's their track record, and whether has it do they produce results? Yes or no? That's all. And
Right.
and whether you want to follow them blindly and stuff like that, that is your call. But I feel that no matter who you watch or whatever you do, it's always good to take it with a pinch of salt. It's always good to get more opinions than less opinions, because from there you can make informed decision. Yeah, it's fair. It's like I mean, like example, right? Like if you're like if you believe like only one person that tell you say, hey, you are short, and you only take this person's opinion, and then and you don't listen to others. Other people say, actually, you're quite tall, but you just say, no, I'm not. I'm just short, because you only listen to one person. So this is what's going to happen. Because if you blindly follow one person, that's what's going to happen. So I encourage everyone to expand your horizon and try to research as much as possible about everything. Yeah.
Okay, Andy. So now I think in terms of investing in ICOs, is there a structure that you would like to follow or you would like to share with the audience, when you make a decision on a particular ICO, being that we've been in this space a while, and we know how wild it can get. Do you think that there can be a winning formula here?
Okay. I don't really think there's a winning formula here. There's a better formula, I would say. Like you could discover ways, but the most important thing is you gotta have your own parameters, right? So for example, Charles has his own parameters that he goes through a certain structure. Same goes for everybody. And we all know some person in anywhere that's trading crypto that's holding on to about 20 ICO coins at least, right? I mean, Brian, Charles, I'm sure you know someone who actually holds no more than 20 coins or stuck. Don't know what exactly to do with the coins and tokens. So for me personally, first things first, we need to understand is that we have to be skeptical about everything. I am a skeptical person. I doubt most of the stuff. I'm always, thinking what's the other side of the page, what's the other thing, or on the other hand, what's going to happen. So we always have to assume that ICO, there's going to be more ICOs coming up. That's a definite thing, right? The question is, when will the regulation kick in? And the question is, which one should I participate in? And I believe in the Pareto principle, right? The 80-20 rule, the 90-10 rule, that out of all the ICOs in a particular month, maybe only like less than 10% are viable. Maybe only less than 10% will survive. And even if you do survive the cut, can you survive the years, the horizon? Are you going to survive the next 1 to 2 years? It works out for all businesses. It works for ICOs as well. So then you have to question yourself, are you willing to lock in the funds for that long? Are you willing to wait for it to hit the exchanges? That is, if it hits the exchanges. What if it doesn't? What if it just dump it and then it's gone, right? The owners just want to get some money, and you realize that, hey, 65% of the funds are held on the white paper are held by the founders, are held by the admins, the creators, whatever, and only 35% are distributed in the market. That should give you a ring, bell, right? No matter how they speculate, how they say their products are good and whatever, that should really be telling you, hey, there should be a huge telltale sign, don't, right? So I think, like what Charles said, white paper is something you gotta read. But then again, white paper can be written by anyone with good command of English, good command of a language, right? I could hire someone for $100, right? Good white paper for me, right? Create some charts, 28 pages, done. Simple. Okay. Also, I think market and industry is really important. There are some market and some industries that are beyond the blockchain. Why do you need a blockchain for it, right? Orbital always says, why do you need a freaking blockchain for this, right? Okay, I'm going to direct a certain market or industry. So, for example, let's just say I want to sell.
Let's talk about let's talk about the industry that should be focused, that should be having ICOs.
Okay, so
let's talk about that industry.
Talk about that. Yeah. I think identification. Yeah, like what Civic's doing, payment processes, and even face pay, moving forward in terms of payment processes, be it in creditless, cardless, or whatever. I think that's what we should be moving towards, right? And even smart contracts, right? Platforms that you realize that like Qterm, Quantum.
But smart contract platforms, right? Okay, there is this issue with smart contract platforms. I mean, personally, I also feel that smart contract platforms, right, only gain value when more ICOs built on top of it. Yep. So it's like an ICO factory.
Correct.
So where is the real value when it comes down to an ICO platform? Because if an ICO isn't being built on it, that means no one is buying the tokens, and then of course naturally when you want to run the smart contracts, there's gas that needs to be spent. Okay, I understand. So that is the only way that an IC or a smart contract platform has an actual use case, because a lot of us we are not, when would be great. For example, I am able to create you and I, we're all able to create smart contracts between each other. And then, for example, right, we are having, for example, Quantum in our wallet, we are creating a smart contract. We are not even companies, we're just users. That is when I feel that, because I have to go and buy, it's like, okay, I need to send a letter to you.
Yep.
I need to send a letter. I need to go and buy a stamp. Okay, I mean, just giving you no one sends this kind of stuff anymore. But I'm just saying, but I need to send something to you. I need to create a smart contract, so I need to have Quantum. So that way, it makes sense. There's real organic growth here. Whereas when you talk about a ICO building on top of an ICO platform, and the ICO platform that's being launched on that particular smart contract platform may not actually be successful, because maybe no one will use them, right? So this is one problem that I do see for smart contract platforms, despite the fact that I'm being very honest when I say this, because I'm not trying to be biased or anything, because we have all made money from Ethereum, right?
Yep.
So what I'm struggling with is that, where is the real intrinsic value? Like, okay, when you talk about Civic, completely understandable, because Civic it's already an application. So, I see people using it. I see the potential of governments using it. It's immediate. No one's going to build on top of Civic or whatnot. It's more of collaborations with Civic, right? People using Civic's face recognition technology and identity management, I completely see it. But for even when I look at Quantum, when I look at Ethereum's price, right, is so fantastic because, firstly, a lot of ICOs and also the EEA gave it a really huge boost. The moment that there were like multiple companies and enterprises joining the EEA, suddenly the price went up. Naturally, miners also are supporting mining it, but then again, miners don't really contribute directly to the price. They're just helping the network grow and provide the security for the network. But when you talk about who is giving the value, it is the ICOs, because if I want to participate in an ICO, am I right to say that I have to buy the Ethereum token so that I can go and deposit it, and then I will receive the ERC20 token in that particular ICO? So if I was to make money, right? So why is the price currently like kind of suppressed below 300? Because most likely, more often than not, the tokens or the founders, right, are going to dump the Ethereum the moment they receive the Ethereum, because they receive the funding. They're probably going to dump the Ethereum, to kind of maintain. Because what I realize is that developers still need to eat. Developers still need to pay the bills. So, for example, they still have to, once they raise the money, right, they are still having to cash out into fiat, and that's what's keeping the price of Ethereum below this price. Always it would have been like, always every time there's a new ICO, theoretically it should always go up in price. But unfortunately, right, people are cashing out, and I think there's someone keeping the price stable at 300. It doesn't make sense, man. It's just not adding up. So, I mean, this is just my thoughts, and
Yeah.
I would love this space to grow properly. And that is why, we're having this episode. Yeah. So sorry to cut you in, but that is what I think. Yeah, man.
But I think the final point that I really think that we have to look at is leadership. And everything rises and falls with leadership. And you also have to talk about whether marketing is strong. Like an ICO that sucks at marketing, or a team that sucks at marketing, doesn't drive enough traffic to direct the market, or even direct the ICO coin. Not gonna have a successful ICO, and therefore you might as well just don't invest in it at all. I mean, even if you have a good product, you have a working model and whatever not, if you don't know how to market it, that's it. The end. The end.
Okay.
Yeah.
All right. I'll take a question from the chat. So, Dama brother, hey guys, love your work. What made you decide to do ICOs? I had the impression you only went for solid coins. Now, that is true because in the past, right, we realized that solid coins may be okay. No, let me rephrase that. There are more solid projects stepping into the ICO space. That is what I'm saying. Now, what makes a solid ICO? A solid ICO means that it has a working product, like what Charles mentioned. It may even have consistent revenue, which obviously it's an audited company, and it's planning to scale, right? So it needs more funding to scale. It goes through the ICO process instead of the IPO process, right? Because since they already have existing revenue, okay, so I give you a very, very good example. Let's say CG. CG is already profitable. We are able to say, if we want to scale, let's say, but we are going to create an ICO because we want to scale. We want to grow our staff size. We want to give better research reports. We want to create a better, bigger platform, right? And for example, we need funding. So we go and create an ICO. We create a white paper and we go and raise money through the ICO, right? And then after that, what we can do is offer a share, we can offer a token buyback at the end of the year because we already know our profit, despite the fact that we do not need to declare it out front because this is not an IPO, neither are we listed on any stock exchange, but at least we know, okay, every month we have an X amount of profit. At the end of the financial year, we are able to, because we are able to honor the tokens that are out in circulation, we can buy them back. Not only that, it's also going to raise the price of people who are holding our tokens as well. You know, so this is something that I can say from CG's point of view. It is the same for traditional businesses as well that are stepping into this ICO space, and that is why we are deciding to do ICOs. So if that kind of explains that actually answers your question, Dharma brother. So yeah, let's see whether there are any other questions that you like to take, guys. Okay, so there's a question on Wax. Wax is 35% public, 65% team. Is this common? So as JJ Andy mentioned just now, or Charles actually mentioned, yes, this isn't like the best in terms of circulation because 65% is held by the team. Now, I look at it from two point of view, from both point of views. One, if 65% is held by institutions, so we talk about not just the team here, we're talking about the backers. Now, a good thing is that if the backers or the founders are held for an X amount of months, that means they're not able to dump the Wax tokens the moment it exchanges. Am I right to say that it's going to create price stability? So that's one thing, right? So yes, it may seem, why is it only 35% circulating in the public? So 35% will basically be out there in the open, and then there's going to be that speculative nature, and at the same time, it's going to raise valuations for the 65%. So that's just the way it is, right? Because you see, you must understand that these people put in the money first. They put in the money first to help it become successful or where it is today. So you also have to give them props, right? So after that, it depends on whether the public, so the public has 35% in terms of circulation. The public decides, am I willing to invest in this concept or this existing project? So, they already have Opskins. Opskins is already profitable. So would you find that having 35% Wax tokens in circulation and paying for that valuation, is it reasonable? You have to ask yourself, is it reasonable? Some say yes, some say no. Some see the potential value of a decentralized exchange in the virtual items market. Some may say no, it's a way too expensive. Wait for it to dump first, then buy later. Yeah, everyone has their own opinion. Everyone can formulate their own reasons. So what would I do, right? I don't mind getting a little bit during the ICO, and then I will wait for what's the response of the market during when once it releases into the exchanges, and then people will tend to dump it as usual. But then let's see what's the price action, and let's see whether or not they deliver on their roadmap. I think that's the most fair way or most logical way if I was to invest in an ICO, not Wax in particular, but just in anything in particular, any kind of project in particular. Right. Let's take another question before we wrap up the day. Okay. I
think I'll answer one question.
Yeah, sure. Go ahead, please. Yeah.
I think, Ahmed, you talk about Chinese cryptocurrencies and whatnot and stuff like that about that. So I think the main important thing about Chinese ICOs or anything like that is just that, number one, you must understand the language, or you must be able to read the white paper or information about it. In all honesty, because I'm from Singapore, my Chinese, I'll be honest with you, my Chinese is not that good. And I can't to a degree of confidence say that this is the right thing or this is a good ICO. Like if you're talking about Chinese ICO, okay, if you all know, there's a podcast by Laura Shin that talks about when they interview Quantum CEO and Neo CEO, they were talking about the Chinese ICO like regulation, and it makes a lot of sense why Chinese ICO came into regulation. And let me just share with you. So one ICO that they mentioned about was that a mooncake company wanted to run for ICO. Like they were asking money because they're a mooncake company. So like how are you going to blockchain that? Like that's ridiculous, man.
I'm gonna sell cheesecake.
Yeah. So like maybe I'm gonna raise I'm gonna raise a cheesecake ICO who wants to buy. I'll call it cheese token, like.
But what? So, okay, no, I'm going to throw this back to your. What if my mooncake, my mooncake shops, right, are actually generating say 300,000 in terms of profit every year, compared to a blockchain technology that is just pure paper that just all code and zero revenue. That means there's no chance for them to even buy back their tokens or do airdrops or whatnot. I mean, airdrops are, by the way, also marketing gimmicks, right? Just to get people interested in the token because it's free. But what if I'm a mooncake company that I have 300,000 in terms of profit every year, and I don't mind sharing that with my token holders?
Yeah. So I think now, that is definitely going to consider like a security, like I mean, whether it is or not, and at the same time, I think. That's why it's very interesting about this ICO space because we have no regulatory framework, like no framework for this. So I say that in itself, if they can prove that they are good, at the same time also, how are they going to ensure that they pay off their revenue and profits to us? That's the main important question. Until maybe, I mean, if they can blockchain it, like they can smart contract their whole process to say that, hey, this is us. But I mean, I think at the end of the day, if they are able to deliver on it, that will really entice investors and stuff like that. But at the same time, it's the Wild Wild West here. So they are honorable people that really genuinely need to raise capital and can't find capital in the sense that they can't raise it through IPO or any of those sorts or any angel investor or anything, or they can't get a loan or something like that, and they have to resort to ICO. So at the same time also, it brings the question like, if you can't get a bank loan, you can't get ICO or anything like that, then why do you go blockchain? So it's a very balancing kind of thing, like, and it's very hard to find a legitimacy in a company unless I think that you really go down to a company and just look at their company and then their open shop and say, hey, this is what. Like, I think that's why it's very important to understand, like, will they deliver on their promise? And same thing like with every investment, it's a promise in the future returns. So I think that's the most important thing. Yeah.
All right.
Because
so bro, I mean, you are someone who is of course a degree holder in accounting and finance. I think most of the time a lot of these companies are struggling to even show that they have some. I mean, they're just basically trying to just talk about only the code and how fantastic it's going to change and revolutionize the whole blockchain scene and whatnot. But at the end of the day, I am an old school guy. I'm an old school guy. I came from the investing in stocks, financial derivatives, mutual funds. All these are at least companies that have a P&L. It's so difficult and challenging when it comes to investing in this space, because as much as I would like to accept the technology, as much as I would like to embrace blockchain technology, where is the value? That's the thing. Where is the value? People are trying to claim that the value is from, for example, how much is in circulation, how much the dividend is being paid out, also called the reward mechanism that is being paid out. So these are the things that I always struggle with until now. And that is why, when so far you're part of the team, what kind of projects we get. And at the end of the day, we are taking on more projects that are thankfully coming on, and they have actual revenue. Even if it's just 1 year, they have actual revenue and they have actual profit, even though it's 1 year. And this is the relief that I can say that is coming into the scene, because the moment that these companies start coming into the scene, they are gonna kill off any kind of magic castle project. Yeah. This is just my personal takeaway. I mean, of from this episode, and I hope that people can really mature and grow up when they really start investing in ICOs. Yeah, I noticed that people are investing and they always boast about how much they made during ICO, 300, 200%, and everything like that. But don't forget, there's usually a cap. All right, meaning that there's only so much that one whitelisted account can actually invest in. Okay, so unfortunately, you need to purchase it on the secondary market. That means once the ICO is completely launched, or you have to be able to be rich enough to enter the pre-sale. And most of the time, right, ICOs these days are pretty smart. They want you to enter in big sums, okay, in order for you to have the bonus, because they want to quickly fill up their pre-sale round. And then from then, you benefit for the fact that you are willing to put in more. You get maybe a 50 to even a 60% discount, or people do pooling, ICO pooling. And that's also another headache altogether. I mean, like, everyone's like trying to get in and want to have the huge discount. And, you all never think whether this dude is going to run away with your Ethereum or run away with your BTC. You guys never even think about that. You just want to make the money, but you never think of the security implications, So it's amazing how I see people jumping into this space with zero or very little, risk management. Seriously, very little. It's like, I am just blown away, man. And when I discuss this with my private banker friends or my banker friends, they're like, firstly, their mouth is just like, they're like, the jaw just drops, because they realize how excited people just want to participate, that they don't care. They do this pooling, they don't even know the face. I was having dinner with a friend of mine. He was saying, you're taking advice from a person who has a Leonardo DiCaprio icon. You don't even know how he looks like. There's no face. You cannot even validate this person, but you're giving him money into his Ether address so that you all can participate into the ICO. So smart. Yeah, I also didn't have any comment, and we just continued to eat. It's like, man, geez, the level of... I don't want to comment, because there may be some people in our audience that does do that, but I hope that after this segment, this episode, it gives you all a little bit of, a bit of reflection. Just be smart, guys. It's like, man, we're trying our best to also educate, and that's why we started Cryptacademy. And Cryptacademy is going to cover blockchain technology. We're going to cover and educate people about the jargons in this space, so that people can appreciate what they're investing in. And of course, naturally, we're going to cover fundamental analysis in terms of investing in ICOs or investing in existing markets, what to look out for. And of course, JJ Andy will be covering technical analysis tomorrow. So those who are interested in technical analysis and they would like to participate in our Cryptacademy course, which happens in around, let me see, 12, okay, in 9 hours time, in exactly 9 hours time, right? Okay, I think in 9 hours time, so 9 p.m. Eastern, okay, 9 p.m. Eastern time, and Asia will be 9 a.m. Okay, we're gonna conduct a Cryptacademy course. So if you feel that you would benefit from this course, please feel free to sign up in the link below. It's just $50 per person. It's a live interactive session where you get to answer questions. And of course, Charles and I will be in there moderating. We will start with a minimum of only 10 people. Okay, that means the moment that we have 10 people, we will start the class. Yeah. So, but the maximum will be 20, minimum 10. So right now we have 8 slots more to go before we launch the class. And I mean, guys, it's just something fun that we like to do over the weekend, because I think education is very important and we enjoy educating our audience as much as possible. Yeah. So feel free to sign up in the link below. And I hope you guys enjoyed the episode. All right, guys. JJ Andy, anything else to add before we close off the session?
Yeah, so I will be the featured trainer for the session tomorrow. And so I'll be talking, let me just show, not really show, let me just share with the audience what I'll be talking about, all right? So question, should we really be investing or trading? And I think Ryan did answer that, yeah? So I'm just gonna give my perspective of should we be investing or trading. So for those who don't know my background, I came from forex trading background for the last 5 years. So I've traded plenty. Daily, I'm a day trader on forex, but I'm a swing trader on crypto. Some people say I should reverse this order, but I doubt so. I'm not going to switch this anyway, right? So I'll also share with you one of the reasons why. I'll talk about basic technical analysis as well. Talk about candlesticks, my favorite. Talk about volume and talk about sentiment, right? And why sentiment actually rules the market rather than whatever, right? Or what news. It doesn't really matter news. When you understand how BTC and F behaves, that drives the market. And that is what you need to know in TA. We're going to talk about trading psychology as well, risk management slightly, the art of taking profit, and finally, the art of thinking clearly. How to think clearly, okay? How to sleep enough, how to have a good life, a life at least, not looking at charts for 16 hours, 18 hours a day, unless you want to be single for the rest of your life, you can do that. Yeah. So I do know some people who do that. They make money, but they lose their life. So, oh well. Yeah. So that's it. Yeah, I'll be seeing some of you tomorrow as well. Yeah.
All right.
That's all.
So all right, guys. Thank you so much for watching, and we'll see you in the next stream. See
See
ya.
you guys.
Yeah, guys.